This is the Asia Trade. I'm Shery in Seoul.
And I'm Paul Allen in Sydney. The top stories this hour. Markets in risk-off mode. Traders betting Jay Powell's Jackson Hole speech is going to throw cold water on hopes for aggressive rate cuts. Treasuries tumble, the dollar gaining the most in more than a month. Investors also bracing for potential surprises from the BOJ governor's grilling in Parliament over this month's massive global stock sell-off. And Kamala Harris set to formally accept the Democratic presidential nomination, kicking off a new stage in her bid for the White House.
Such a busy Friday, isn't it? We are going to be hearing from Governor Ueda in Parliament. Such an unusual session because the broader Parliament isn't in session right now, but lawmakers really insisting to hear from Governor Ueda on last month's rate hike and the subsequent market volatility. But of course, all of this happening while we also have Jackson Hole and that speech by Chair Powell to look forward to.
Yeah, that's right. In advance of that, we've seen a bit of repositioning in the market, yields climbing, stocks falling. The market may be grappling with this possibility about not getting aggressive rate cuts. I mean, maybe we're just going to get a speech about data dependency and patience as well. But September still seems a pretty good chance, Shery. You know, we did have that downward revision to the jobs numbers, and the minutes from the last meeting from the Fed seem to have a fairly dovish tilt as well.
So markets really bracing for more volatility. Take a look at how futures are setting up because we saw, as you said, U.S. stocks falling, bonds falling, treasuries really tumbling across the U.S. curve with a move really led by the shorter end, 10-year yields up past that 385 level. And when we're talking about stocks, we saw really tech leading the declines. And of course, we are headed towards NVIDIA's earnings next week, really the highlight of this earnings season. And you're seeing crude at the moment coming online in the Asian session, not really doing much as we're setting up, of course, for the open in Asia. Take a look at how Nikkei futures are trading at the moment. We saw some gains in the previous session after we saw some weakness on the Japanese yen. The dollar actually gaining the most in over a month overnight. Right now, you're seeing Sydney futures to the downside about 0.5%, while you're seeing the offshore yuan holding at that 714 level. But really, it's about what happens today in Japan because not only do we have Governor Ueda speaking, but we also have another CPI report coming up, Paul.
Yeah, big day for U.S. politics as well. Kamala Harris going to accept her party's nomination as its presidential candidate in just a few hours' time on the final night of the Democratic National Convention in Chicago. Now, this marks a transition into a more difficult phase of the campaign when Harris is going to be challenged to prove her recent momentum is more than just a short-lived honeymoon. Bloomberg's political news director Jody Schneider is at the DNC, joins us now for more. Jody, what's the content of tonight's speech going to be from Kamala Harris, and how important is it in terms of maintaining that momentum into the final stretch of the campaign now?
Yeah, this is an incredibly important speech for Kamala Harris, Paul. As many people know her as the vice president who didn't really have a tremendously high profile during these 3.5 years of Joe Biden's presidency. But now she's thrust into the spotlight. Within a month, she went from being somebody who, helped him on projects to being the nominee and somebody who there's been a lot of enthusiasm for. The question is how much of that was relief by Democrats over Joe Biden stepping aside and there being sort of an orderly transition to someone else, and how much of that is something that she can really run on. So we'll probably hear a little bit of policy tonight. Certainly she will probably really hone in on this middle class theme, helping the middle class, that she's here for working people, that she knows what it's like to be a working person and to have grown up in a household where that was important, but also to talk a little bit about some of those issues around that. Probably a little bit of attacking of Donald Trump, but she's got to do the vision thing, as we say tonight. She has to leave people with a message that they can associate with her and her campaign. And she's got to try to motivate people. You know, as we say, this is the easy part, the week of everybody coming together and having all these great speeches and this unity, but then going out on the campaign trail and really turning that enthusiasm into people who are going to vote for her on November 5th is really the challenge. And Donald Trump is ramping up not only his attacks, but he is being able to more cohesively develop a theme around her presidency. Again, he didn't expect to be running against her. He's now had a month to get ready for that. And so what we see is a traditional open of the campaign season in the fall after Labor Day. That will really be when it gets really time for her to take that message on the road and see if it can stick and see if she can win those states that she so badly needs to win. And that will take winning over some independent voters, some undecided people, maybe even some Republicans.
Yeah, what do the polls show right now? Because we saw growing momentum, especially coming into the DNC. But as you said, Donald Trump has kept himself busy.
Yeah, he has. Often the candidate whose convention it's not kind of keeps quiet and lets, the other party have their convention. But he has certainly not been doing that this week. Shery, he's been out and about on the campaign trail, went to swing states, went to North Carolina, went to a border state, really has been not only attacking Kamala Harris, but sort of attacking the fact that she has been with the Biden administration for the past 3.5 years. And on issues like the economy and the border, she has to own that, is what Donald Trump is saying. It's not enough for her to say, well, things will be better under me. His question is, why haven't things been better on these issues the past 3.5 years? He's more honed that attack even in recent days, and that's something she's going to need to start answering.
All right, Bloomberg's political news director Jody Schneider there at the DNC in Chicago. Now, Fed Chair Jerome Powell set to usher in the next chapter in the inflation battle. He's going to be delivering his highly anticipated Friday speech at Jackson Hole. Global economics correspondent Enda Curran joins us now for more. So, Enda, we're used to hearing rather cautious words from Jay Powell. Is there any reason to think we're going to get anything different at this speech?
Well, the expectation among economists and markets is that this might be a speech where there is something of a new signal or an advanced signal in terms of where monetary policy will be going next. Paul, like you mentioned, the Fed officials in recent weeks have been signalling they're more worried about the jobs market than inflation now. So the question for tomorrow will be, will Mr. Powell give a hint towards a cut in September? Will he give a hint towards the size of that cut in September? Will he give a nod towards the size and pace of cuts in the months after September? So there are lots of question marks ahead of what he will do tomorrow. Of course, to your point, he may also continue to play it fairly safe, like the Fed officials have been, which is to say they're watching this month by month, or keeping an eye on the data set by data set. He may fall short of giving any signal at all. But the expectations going into tomorrow, at the very least, are that it's going to be a very important Jackson Hole speech. It has been a platform for big policy announcements in the past, so we'll have to see what comes out of it in the morning.
Have we seen any consistent data after, especially that July jobs numbers that led to so much market volatility?
We're getting conflicting pictures on the US economy right now, Shery. I mean, to your point, we had the jobs numbers, which were considered weak for July, but of course then there was a lot of analysis by economists saying there was a weather impact there, bigger than initially understood. Then, of course, this week we had a revision in the annual jobs number, suggesting maybe there were 800,000 less jobs in the year to the end of March, suggesting a weaker than expected labour market. And of course, we continue to get pockets of readings of softness around the economy. Today, we had manufacturing activity showing that sector actually shrunk by the most since the beginning of this year. So there certainly are pockets of weakness. All that said, though, there's also signs of robustness, strength. The retail sector is holding up okay. Big box consumers continue to be holding up okay. The annual earnings season hasn't exactly spoken to a consumer falling off a cliff or whatever. So it's a complicated story, but on balance, it looks like right now it's a slowing economy. The big balancing act for the Fed, of course, is that they will need to move and offer some relief on the mortgage front before a slowing economy turns into something much worse. And that's a big balance, and that's a big balancing act for Mr. Powell in the speech tomorrow.
And of course, the Fed tries to stay away from politics. But as we were discussing with Jody earlier, really the election season is heating up, and that will just come up in November, just as everybody is expecting that September rate cut. What will be the balancing act like when it comes to pressure from just Donald Trump, for example?
Yeah, there's no doubt the Fed doesn't do party politics. They set policy for the economy, but at the same time, they're now at a very important point in a razor-tight election campaign. On the one hand, if they were to cut rates, obviously the optics of that would lead them open to, allegations of favoritism from Mr. Trump's campaign. If they were to wait and cut rates after the election, they could be accused of doing so by the Democrats. Either way, there's no doubt that Mr. Trump consistently has put more pressure on the Fed. He's questioned the role of the Fed in terms of what they're doing with inflation and interest rates. He speaks about it from time to time. The Fed, of course, jealously guard their independence. They push back hard against political interference. But, whether they like it or not, whether they want to be or not, they are now at a critical inflection point for the monetary policy cycle, coming out in one of the tightest and most sensitive election campaigns in years.
Global economic correspondent Enda Curran there. And of course, BOJ Governor Kazuo Ueda will also be facing his own political pressures domestically, facing intense scrutiny today with questions from Japanese lawmakers. Investors bracing for potential surprises from his appearance after the governor's hawkish stance earlier this month helped trigger a massive sell-off in global stock markets. For more, let's bring in our Japan economy and government editor, Paul Jackson, in Tokyo. And Paul, what will you be watching out for when it comes to Governor Ueda's comments? Because it seems since we had that market volatility, we have seen a lot of the data points coming in stronger for Japan.
Yeah, I think we're moving from one balancing act to another. This time it's a case of when the Bank of Japan will raise interest rates again. That's the opposite direction to the Fed. And I think Mr. Ueda has a tough balancing act to achieve in his comments today. It's going to be a 5-hour grilling in Parliament as lawmakers try to find out whether the timing of that rate hike in July was appropriate or not, given the market ructions that it helped to trigger. Now, the governor has a tough task ahead of him because he's got to balance the need to reassure investors that he will make appropriate decisions. He won't race ahead with rate hikes. He'll choose appropriate timing. But at the same time, he also wants to keep the possibility of raising interest rates on the table. And of course, one of the reasons he went ahead with that hike in July was to leave open the possibility to raise interest rates again before the end of the year. Now, the expectations of when that might happen, or if it will happen, have retreated somewhat. But I think that the comments we've seen from Ueda's right-hand man, Uchida, who said that they would keep rates where they were for the time being, suggests that there's going to be no change this quarter. But I still think by the end of the year, December, for example, is still a possibility.
Paul, we were just talking a moment ago about the political pressure that Jay Powell's feeling as the US closes in on election season. Governor Ueda's got the same sort of thing to deal with as well, to a degree, I guess. I mean, there'll be a new prime minister chosen in Japan next month, and a couple of the candidates have been quite critical of him so far.
Well, I mean, Japanese policymakers have been trying to achieve inflation for decades, certainly more than a decade, with intense policy measures to try and stimulate inflation. And the Prime Minister, who's kind of overseeing, this, achievement of 2% inflation, or getting very close to that, has kind of paid for it with his job. That's been one of the key factors keeping his opinion poll ratings down. So to an extent, the success of the inflation campaign has cost the job of the Prime Minister. So is there a political element to all of this? Oh yeah, sure there is.
All right, Japan Economy and Government editor Paul Jackson there in Tokyo. Coming up on the Asia Trade, we're going to talk investment strategy next with Shinhan Asset Management, who suggest going overweight on Korean banks against the Kospi. Plus, we get Japan's latest CPI numbers. JPMorgan Securities is going to tell us why they see 3 more BOJ rate hikes by the end of next year. This is Bloomberg.
This is the Asia Trade. Here is one of the highly read calls on the terminal at the moment. Bloomberg opinion columnist Mohamed Dayeon says traders are overplaying the prospects of an aggressive series of Fed rate cuts. Investors have recently cemented bets in the swaps market. The Fed officials will ease policy by as much as 1 percentage point by year end. But Dayeon thinks a 75 basis points cut is more realistic. Let's get more perspective on what this means for the broader markets with our next guest. Dayeon Hong is a multi-asset portfolio manager at Shinhan Asset Management and joins us here in Seoul. So great to see you in person.
Thanks for having me.
So right now it seems that 25 basis point rate cut by the Fed in September is sort of locked in. Markets pricing that in completely at the moment. Is that your call too?
Yes, I think it's really a matter of whether it's 25 or 50 basis point for the September FOMC meeting. Now, my base case scenario is 25. We've had very weak July payroll numbers, and that has caused, obviously, huge volatility in the market. But a lot of that was to do with weather-related issues. We've had hurricane in Texas area. We've seen a bunch of different data showing that some of that was related to the weather. And so far in August, the payroll, the initial claims numbers have been quite steady, meaning that August payroll may not be as bad. So I don't think it would be enough for the Fed to really go for 50, that deeper rate cut.
Yeah, showing that gradual cooling of the labor market, but not necessarily the horrible downturn that everybody's expecting, right? But at the same time, when it comes to data, I mean, it's been a little bit of a mixed picture, right? Manufacturing, shrinking by the most this year already. Overnight, we saw the data. What does that mean for the markets? Because on a day like today, you have so much happening, whether it's the central bank in Japan or whether it's Jackson Hole and all of this Fed speak, including Chair Powell.
I think the volatility will still be there. Given what's happened with yen carry trade and the risk that I see, the concern actually is that nobody really knows how much of yen carry trades are out there, right? So that itself is a concern. Going back to the U.S. economy, I think so far the Fed wants to be gradual, but we have never seen a case in the past where the unemployment rate just gradually increases, right? We've always seen a spike at some point. Now, we don't see that at the moment, but we cannot rule out such a case down the road. And the one thing that really concerns me in the payroll data is that job growth is really concentrated in 2 different sectors. One is medical services, the other is government. So the job growth is really not broad-based, but much skewed in specific sectors. That itself is not a really healthy sign of the labor market, and so we really cannot rule out the job market really deteriorating down the road, triggering the Fed to call for a deeper rate cuts.
Does that mean that you're positioning in that sense, in that way, in the bond markets as well?
Yeah, I mean, we've seen a bit of spike in yields last night, but I think U.S. bonds are really attractive at this point. I see by the year end, 10-year moving down close to 3.3%. So we are really looking to increased duration in our portfolio. I mean, we're really looking for a really good entry time above 4%, but we haven't had that in recent trading days. But at any time that 10-year comes above 4%, I'd look to, increase overweights in U.S. bonds.
Which is kind of a different call, or completely the opposite call that you're making for Korea.
Yes, we are actually shorting Korean bonds. We've had the BOK decision came out yesterday. The BOK is really much focused on financial stability. Actually, the inflation and growth data are really showing that they should cut. But one thing that really concerned about it is the property prices. And that is really holding back the BOK from cutting. The market is already pricing more than 2 rate cuts by the year end. 3-year KTB is trading at 2.9%. That's 60 basis points below the policy rate. So I don't see much of a room for the KTB Korean bond deals to fall further from here. So I'd rather go short Korean bonds and long U.S. And from a Korean won-based investor's perspective, a lot of investors here need to hedge the dollar back to Korean won, and that hedging cost is quite expensive. Right. And so I know a lot of investors tend not to go for U.S. bonds at this level. But if you think about the capital gain, if we see more movement in the U.S. bonds down the road, then I think it's more attractive in that sense.
When we look at the Kospi, the equity space has lagged behind other markets, right? Are we going to see some sectors, like if that's a call that you're making on the BOK and bonds, and does that mean that you like, say, financials?
Yeah, I think financials still look quite attractive. The funding rate right now is quite low. If you look at 3-month CD rate, it's very close to 3.5%, the policy rate. That means that banks can fund at a very low rate. At the same time, they're forced to increase the spread over the market rate for their lending rates. So their net interest margin will stay quite high for some time, increasing their earnings. And so I think, that trade to go overweight Korean financials over Kospi has worked quite well since the beginning of July, but I think there is still room for that trade to run further.
Dayeon Hong, it was really good to see you here in person in Seoul. Thank you so much for joining us. She's the multi-asset portfolio manager at Shinhan Asset Management. We'll have more ahead on the Asia trade. This is Bloomberg.
This is the Asia Trade, some of the top stories from around the world. The bodies of British tech tycoon Mike Lynch and Morgan Stanley International Chair Jonathan Bloomer are among the 5 now retrieved from the wreckage of a luxury yacht that sank off the coast of Sicily on Monday. Lynch's 18-year-old daughter remains missing, presumed dead, after the boat was hit by a tornado. Italian authorities are investigating exactly how the super yacht sank and why it went down so quickly. Thailand has become the first country in Asia to detect the new mutated strain of the Mpox virus. The patient is a European male who arrived in Bangkok last week from Africa. Thailand says it will tighten surveillance at all international checkpoints, while travellers from countries with Mpox outbreaks will have to undergo health screening upon arrival. More ahead on the Asia Trade. This is Bloomberg. We are getting breaking news out of Japan. CPI numbers for the month of July holding steady from June at 2.8%. That's a bit better than the market was expecting. There was expected to be a slight deceleration to 2.7%, but no, it's steady at 2.8%. Stripping out fresh food on year, a slight acceleration from 2.6% to 2.7%. So core consumer prices rising at 2.7%. The national CPI number 2.8%. 0.8% in July. Right, let's bring in JPMorgan Securities Chief Japan economist now, Ayako Fujita. So I just want to get your reaction to those CPI numbers, if I can. Holding steady, in your view, has the BOJ done it? Mission complete? Is inflation now sustainably in that target range, or is there a risk of deflation returning?
I don't think actually risk of deflation returning is getting higher, because this the level of the acceleration is actually higher than market expected. It's pretty much driven by the removal of energy subsidy. And this is actually temporary factors, and also we expect actually energy subsidy to be reintroduced in the coming months. So this actually the kind of actually headline inflation is likely to be a little bit volatile coming months. But starting from fourth quarter this year, we expect the acceleration of inflation because many firms start to pass on the higher wage cost to consumers. So inflation is likely to be muted during the summer months, but it's going to be relatively temporary.
Okay, so you see another rate increase from the Bank of Japan by the end of the year. Can you tell us a little bit more about your calls and why you see the BOJ acting this way?
BOJ has been actually repeated their policy strategy actually since April. BOJ sees current monetary policy setting to be highly accommodative because despite higher inflation, actually BOJ's monetary policy adjustment has been limited. So real interest rate became super negative compared to actually even to compare with during the Abenomics. So the BOJ strategy is actually scaling back excessive monetary accommodation when actually BOJ gets some confidence that inflation will be anchored at 2% level. In that environment, actually, given our expectation of inflation to accelerate starting from fourth quarter, BOJ will gain further confidence that actually inflation will be anchored in 2%. So December could be probably a good timing for BOJ to gain further confidence that actually the inflation will likely to be anchored 2% for actually coming years.
Ayako, how can the BOJ, especially Governor Ueda, carry out that process without causing market volatility? Remember in April, we saw the huge sell-off in the Japanese yen and the plunge. Then this time around with the rate hike in July, we saw this unwind of carry trades. And now he's facing a grilling by lawmakers. So how do you carry out the communication process so you do not really cause this revolt in the markets?
Okay, so for BOJ, lesson learned based on this experience was the risk of policy becoming excessively behind the curve, rather than actually the risk of the policy rate hike. So BOJ recognized the reason why actually market volatility gets higher after BOJ's hike was actually the market accumulated excess positioning of yen weakness and potentially actually the equity market as well. So based on this experience, probably BOJ is likely to deliver a rate hike in the right timing, not actually too early or not too late. So which means that actually BOJ will not actually stop the rate hiking process based on this experience, but BOJ tried to communicate more clearly actually their strategy of gradual rate hike rather than rapid rate hike or actually excessively delayed rate hike. So it's kind of timing communication is relatively important for BOJ from here. And I expect actually Ueda will deliver this message for upcoming actually diet meeting.
It's such a difficult and tricky position for Governor Ueda, right? Every time we have that press conference, the markets react. So in today's hearing, what does he have to be careful in the messaging in order not to upset the markets again? Because are we going to see another bout of volatility and his deputy governor will have to come out and try to rein that in? I mean, I really don't understand how he will go about with the process of doing this. Should he speak to media more often too?
I think actually, probably what he needs to do is more kind of clearly indicate what actually BOJ's actually strategy policy normalization. Because how Ueda present his strategy seems to be relatively a little bit too academic, and so therefore actually many market participants actually misunderstand what actually BOJ's policy strategy is. So it's better for Ueda to clearly indicate what is the kind of reaction function for BOJ and what is the trigger point for BOJ to deliver additional hike, and focusing on that the BOJ's gradual approach in terms of policy normalization. Because the reason why market get a little bit upset after the BOJ's hike in July was some market participants misunderstand that BOJ wanted to deliver a consecutive rate hike or every quarter rate hike. This is not what BOJ has sent a message to us.
At least when it comes to the economic data, does Governor Ueda seem to be vindicated? Because we have seen now real wages turn positive, and this inflation point data also showing that perhaps we could be getting that virtuous cycle of sustainable price raises.
For BOJ, nominal wage is more important than real wage, of course. BOJ's target is inflation, and inflation is nominal indicator. So BOJ has to focus on nominal wage data, and BOJ has to clearly indicate to the market that BOJ is seeing nominal wage data, and once nominal wage data gets higher, then for BOJ, the risk for inflation to be getting relatively above the target is getting higher. So it's of course we expect nominal real wage to turn to positive in the fourth quarter, and that will give BOJ further confidence that demand-driven inflation will be taking hold. But the recent wage dynamics itself gives BOJ's nominal wage index itself gives BOJ's further confidence that inflation likely to be anchored to 2%. So that is clearly BOJ need to focus on that.
Ayako Fujita, really good to have you with us. She's a chief Japan economist at JPMorgan Securities. Now, as we were discussing, the BOJ's rate hike blew up a yen-centered carry trade. Now, as the dust settles, investors and Japanese business owners alike are questioning the yen's role in the global economy.
Single summertime decision by Japan's central bank ended up triggering a panic. And at the heart of all this, the Japanese yen and a massive global unwinding of the so-called carry trade. So what are carry trades, and why are they contributing to volatility in financial markets? In short, they're a popular strategy of borrowing currency at a very low rate of interest, the yen in this case, and investing it in something that pays you a higher rate. Now, you might make a return from that trade because it's kind of like investing free money. But
if things go incredibly wrong, you'll lose money both on the stock side, and then you have to pay back your credit company as well.
Which is exactly what happened in August.
And it all culminated in the Great Unwind, as we call it today. The yen, which everyone had been selling to fund this carry trade, surged in value. All of a sudden, at the same time, people started selling everything that they had in order to cover those margin calls. They had to pay for their losses somehow.
So what we've seen during this market crash basically is that what Japan does, what the Bank of Japan does, can have major implications for the rest of the world.
And subscribers can see that report in full on the terminal or at Bloomberg.com. It'll be up on the Bloomberg Originals YouTube channel later as well. Now, a rebounding yen could revive stocks tied to Japanese domestic demand, such as retail, technology, and food companies. Our senior Asia stock reporter, Hideyuki Sano, joins us now with more. Hide, we saw really the gains when it comes to Japanese equity markets because of a weaker yen, because of this perception that perhaps exporters were going to gain if we have more strength in the yen then. Could these other more domestically focused companies then gain ground?
Good morning, Shery. Yes, I think that's what we are starting to see. We look back just about a month ago when the Japanese government intervened in the currency market. The market chatter we heard most was that intervention is not going to work. It only have a short-term impact, and therefore a lot of investors are still basically expecting the yen to weaken. Now the perception has changed clearly, and that has a huge implications for stock investors. Now, investors have basically sort of underinvested in those domestic demand-oriented shares, such as food companies, retailers, and even IT companies. So the chances are that investors still have to readjust their portfolio as they sort of change their expectations on the yen.
Is the carry trade fully unwound yet? There's a lot of discussion about whether it has or not, because the rates differential is still quite high. Is there a chance that yen carry could be making a comeback?
Yes, I mean, that's $1 million question. I mean, nobody really knows the exact size of carry trade. That said, if you look at the performance of domestic demand-oriented shares in Japan, basically they have underperformed for the last 3.5 years when the yen has been weakening. And so it is probably fair to assume that at least in the stock market, people are still likely to have underweight positions on those shares than they wish now. But on the other hand, we're going to hear Mr. Ueda speaking in literally within an hour. And if he says something that is less hawkish than some people expect, then the yen might weaken again. So, I mean, it's really hard to tell at this point. But at least when it comes to the stock market, the risk reward seems to be tilting towards domestic demand-oriented companies.
All right, senior Asia stock reporter Hideyuki Sano there. We have more to come on the Asia trade. This is Bloomberg. All right, let's take a look at how we're setting up for futures around the region today. A big day in terms of central banks. We're going to be hearing from Powell much later on, but first Governor Ueda, and we're setting up like this. A little bit of softness as markets position for those two major speeches. We've got ASX futures off by about 0.5%. Nikkei futures just a little bit softer as well. S&P E-minis, though, in modestly positive territory as we do await those remarks from Powell at Jackson Hole. Well, Australia's stock benchmark has clocked 10 straight days now of gains. That's its best winning streak since February 2015, and signs of a likely Fed cut also giving regional shares a lift. Asia stocks and credit reporter Georgina Mackay joins us now. So, Georgie, what's been driving this rally?
Sure. So let's preface this with saying that the rally looks like it might actually end today, which is a bit disappointing. But so we've got 10 days. We've got the offshore lead feeding through to the Australian market as it is across the region. Then it's also been earnings season here. So we've had positive reads from the banks, which is one of the most heavily weighted sectors. So CommBank and Westpac, they both performed better than expected in earnings. So shares got a little bit of a lift. And then we've also, on Wednesday, the market rose here in Australia, which sort of bucked the trend we were seeing in broader Asia, because we had positive reads from companies like WiseTech and Brambles. So all of those factors feeding through, and a modest recovery in iron ore miners has seen the benchmark with that prolonged rally.
Yeah, so the planets seem to be lining up. What's the focus going forward?
Yeah, so it's going to be all about miners next week. So iron ore prices have had a pretty choppy couple of weeks and months and even year. So next week we've got BHP, we've got Fortescue reporting. So everyone will be looking at those companies for outlook commentary, or where prices are going to go, what sort of the tone, is it better than expected? Rio's results were slightly better and shares got a bit of a lift, but Fortescue in particular has performed quite poorly as of late, but it's kind of had a few upgrades, perhaps on valuation basis, and we've seen a bit of a lift and investors going back in, perhaps positioning before earnings. So it's going to be all about the miners and all about iron ore.
It's all about central bank speak for a lot of other global markets today. How about the rate story here in Australia?
Yeah, for sure. So since the last inflation data, we had a hold, obviously, in August, and looking forward, we're lagging in terms of cuts. The RBNZ delivered a cut and the market loved that. We saw a nice big jump. In Australia, the rates are looking a little bit further drawn out, and we had Michelle Bullock recently talking about how it's a way off. So we're lagging global peers, but the economy seems to be holding up fairly well. We're seeing through consumer earnings that we've had resilient consumers. The Australian people are still going out and shopping, and we have the super retail, Universal Group. So with those beats in mind, that the story's still positive, but rate cuts are way off.
All right, Asia Stocks and Credit reporter Georgina McKay there. Let's get the latest now from the corporate front. Tesla shares slipping after data showing BMW pulling ahead in July to lead Europe's EV market for the first time. Industry consultants at JPMorgan Dynamics say sales of fully electric BMWs in the region jumped by a third to more than 14,800 units. Tesla still holds a commanding lead in EV sales on a year-to-date basis. It's losing market share in Europe to the likes of BMW and Volvo. Uber shares fell after the bell following news it's planning to offer self-driving cruise cars to customers on its ride-hailing platform next year. Uber says the offering will begin in a single market in the US, but declined to disclose the location. Cruise is looking to regain traction after grounding its fleet in October following the alleged mishandling of a collision with a pedestrian. Shery.
And keep an eye on shares of Chinese internet giant Baidu at the open in Hong Kong. Its ADRs fell in New York after second quarter revenue came in slightly weaker than expected. Let's get more with our tech reporter Annabelle Drewlers-Bell. So Baidu's AI efforts were a key focus.
Yeah, it's really all about trying to monetize those AI initiatives, and where Baidu perhaps is falling short. I mean, it's been quite a key theme for major tech companies globally. What came through in these numbers, though, was net income was actually a little bit higher than what analysts had been projecting. Revenue, though, for the 3 months ending June came in just fractionally short. So the projection or estimate had been for 34.1 billion yuan. It came in at 33.9, so very close, but enough to spook investors because you've seen the last close there for ADRs. Again, Baidu has really been leading some of its peers in the space. This chart here taking a look at Baidu versus the likes of Alibaba and Tencent. The Baidu is the line in white there, and it has been underperforming. Its large language model is called ErnieBot, and we have seen it really taking an early lead in the AI space in China, but rivals are close or fast catching up to it, and it really could be years before we see Baidu being able to comfortably cut its reliance on earnings or advertising earnings revenue.
Is that what analysts are cautious about right now? What are they saying?
Yeah, exactly. I mean, the sort of reaction to these earnings has been a little bit mixed, just how much caution analysts are throwing out there. Our Bloomberg intelligence team, for instance, is probably on that more cautious spectrum. They're saying that the outlook remains highly challenged here. They're expecting their AI ventures to continue losing money for at least the next 3 years. And again, they're highlighting that Tencent, Alibaba, they're continuing to narrow the gap. The search engine business as well, which has been Baidu's primary income generator, Bloomberg Intelligence says that could remain under sustained pressure. Again, it's about short-term or rising competition in the short video sector as well. That's playing into it. Citi, for instance, they also said that this pace of renovating the Baidu search engine with AI, that's having a short-term impact on monetization. But again, I mean, you take a look at the analyst recommendations and you can see the vast majority of those that have a rating on this stock are still keeping it a buy.
Annabelle Drewlers there joining us in Hong Kong. We do have more ahead on the Asia trade. This is Bloomberg. taking a look at live pictures out of the Democratic National Convention in Chicago. We're awaiting that speech by Kamala Harris, the Democratic presidential nominee, to give her much anticipated speech at the convention tonight. We are expecting her to touch on key issues like inflation and taxes. But really, Paul, what a turnaround for Kamala Harris, right? This stunning political transformation when it comes to just becoming the vice president, to campaigning for the top leadership position in Washington as well.
Yeah, the critical thing here is, can that momentum be maintained all the way into November? Because certainly these conventions are a tremendous amount of fun for the party faithful. We had comedian Kenan Thompson out there a little bit earlier holding a giant book marked Project 2025. So the Democrats are really hammering that theme, that is a Republican manifesto of sorts. There's been a bit of pushback from that from former President Trump. Elizabeth Warren has already spoken today, but yeah, you're quite right. The main event everyone's excited about, hearing from Kamala Harris a little bit later on. Ahead of that, let's take a look at how the bond market's tracking at the moment. We do get trading starting in Tokyo in a short while. We have seen yields climbing just a little, stock sinking as well. The market really wrestling with this possibility that maybe Jay Powell could just hose down market expectations of aggressive easing when he speaks at Jackson Hole a little bit later on. September does see a good chance. I think it's just the question of how big that rate cut might be, Shery.
Yeah, I mean, we heard from the Kansas Fed president as well today saying that he wants to see more data before supporting rate cuts. We also heard from the Boston Fed president, Susan Collins, also talking about a gradual, methodical pace likely to be appropriate. But, of course, really markets have priced in those rate cuts. Mohamed El-Arian now saying that perhaps the market is overdoing it. But take a look at the Japanese yen, because it's also about the central bank in Japan. We have Governor Kazuo Ueda speaking today at a special session, very unusual hearing taking place when the broader parliament isn't in session right now. And this, of course, to do with the rate hike that we saw in July and the hawkish signals really contributing to that market volatility that we saw in early August. Right now, we're seeing the Japanese yen strengthening a little bit, but we had some weakness overnight against the U.S. dollar. We'll bring you our special coverage of the DNC in Chicago as well. This is Bloomberg.